Hello everyone, welcome back to Just Invest Today. Today we're talking about the bull market for China, why the super investors were all in China, because we had David Tepper, we had Michael Burry, we had Rob Vinall all buying into China heavily before this huge stimulus even hit. I'm going to go through Rob's thesis that just came out in one of his letters. I thought what he said was pretty much perfect, and that's kind of the sentiment I was feeling even before this whole China market rally. I've been investing in China for over 3 years and I was calling it way back then. So let's get into this video. Let's talk about Michael Burry's, David Tepper's portfolio, Rob's portfolio, what they're doing, what we can see for China going into the future. So Rob Vinall from RV Capital is actually a super investor that I follow, and he's done like 15% over the last like 10 plus years. So he's an amazing investor and he has a track record to prove it. So we're going to go into why he's buying China, because he was adding into PDD from the last like 2-3 quarters. And now he's adding even more Chinese stocks. In Rob's letter to shareholders, here's what he has to say about a China basket. In the first half of the year, I added one additional Chinese company to the portfolio, NetEase, a video gaming company. Since the end of the period, I added 3 more, Yum China, an operator of KFC and Pizza Hut in China, H World, the second largest hotel company in China, and Didi, the dominant rideshare platform in China. This takes the total of number of investments in China to 6. I do not rule out buying further investments, but I'll cap the overall China exposure. And guys, if you think about it, a portfolio manager buying 6 Chinese companies, that's kind of insane. Like, you do not see that too much because everyone is so scared of the China risk, the government taking your shares, all of the government pressure that people have been talking about is just so high that like everyone is avoiding China. You gotta think about the companies that he's buying. They're not like pushover companies. NetEase is one of the dominant video game producers. It's NetEase and Tencent. So those are basically in an oligopoly area. So like, why wouldn't he buy that? Yum China is a dominant brand, KFC and Pizza Hut in China, and the second largest hotel company in China, and Didi, the dominant rideshare platform in China. So he's being able to buy these really strong companies at low multiples, and they're dominant. They're not like these like garbage companies. So this is why he's really into buying China. The valuations in China are the most astonishing I have seen in my investment career, including during the great financial crisis of 2008 and 2009. Look what he's saying. Like, that's not like, that's a huge statement to kind of talk about. Bigger than 2008 and 2009? Damn, that's crazy. Take the companies we own. They are blue chips with dominant competitive positions in their respective industries. They are highly profitable. They have oodles of net cash. They are growing at top and bottom line despite the struggling Chinese economy. What do you think is going to happen when the Chinese stimulus actually hits the economy and not just like the words that the government is saying? The money actually goes into the economy. It's just going to be crazy the amount of spending that the Chinese consumer is going to be able to do. So a lot of these consumer products, a lot of these companies that sell a lot of goods, they're going to do just fine. Despite these favorable characteristics, they trade at PEs ranging from mid-single digits to low double digits. And this is where I brought up the chart of the low single digits of like Baba, of like PDD, of like JD.com. Like you're seeing it everywhere. And 5 of the 6 are aggressively returning cash to shareholders. The most aggressive is Yum China, which is returning 1.5 billion on the market cap of 13 billion at our cost, equivalent to a 12% shareholder return. That's amazing shareholder return just from buying back shares and giving out a dividend without even growth. And we know KFC is going to grow in China. Pizza Hut is going to grow in China. As an aside, Chinese companies have undergone a sea change in recent years in terms of returning capital to shareholders and their overall competitiveness. I remember when the consensus was the Chinese companies would never return capital and would never amount to more than low-cost manufacturers. When it comes to reporting on China in the West, it seems that the good news travels slowly. Many Chinese companies have started aggressive capital returns. Lufax, this is a financial service company. It's up 80%. Even paid a dividend earlier this year that was greater than its market capitalization. And this is super key because a lot of these Chinese companies are just buying back shares and giving you a huge dividend. So even if the Chinese market goes back down or the Chinese market doesn't go up, they're buying back all these shares at cheap valuations and giving you a dividend. So you can be patient while the company buys back 40-50% of the company. So you're going to be the remaining shareholder at the end of this journey if you just hold on to your shares, or the company does its job and just buys back a lot of shares. So that's basically Rob's thesis. And when you think about it, David Tepper had the same thesis about China, that the stimulus is coming, that they're selling at cheap multiples, and that he's just never seen these valuations like this, and the buybacks are going to be crazy. The government is basically lending them money and telling them to buy back more shares at these cheap multiples. And we already know Michael Burry and how he operates. Michael Burry is willing to go anywhere just to find very cheap companies. And when you look at his portfolio, you can see that he was doing that. And that's why he was so heavy in China. When you look at his portfolio, he still has 21% of his portfolio in Alibaba. I'm actually so curious about Michael Burry's updated portfolio. I'm really going to be watching it, because is he going to be selling BABA after this crazy run? Because he was buying it at like $72, super cheap. He was buying Baidu, crazy 87%. So like, look at that conviction, man. Imagine increasing your percent. Imagine increasing your stake by 87% in 1 quarter. And it's already 12% of his portfolio. He had JD.com, he reduced it, but it was still 12% of his portfolio. So we're going to see if he's actually selling this run. He might be selling half. I guarantee you that he still thinks these Chinese stocks are very cheap. Then we even have Rob Vinall's portfolio. Rob Vinall was buying PDD. He upped it by 9%, 10% of his portfolio. And in his letter, he was talking about owning Prosus, which is not showing here because it's an international company. He owns 10%, which owns Tencent. So he was in PDD, Tencent, and then he talks about buying NetEase. So we're going to see NetEase come in his portfolio. We're going to see the second largest hotel chain come in his portfolio. We're going to see Yum China come in his portfolio. And these stocks have been skyrocketing like crazy. In the past month, Yum China has returned 47%. Like, that's crazy how fast Yum China went up. And he was probably seeing these cheap valuations. And I wonder what he's going to do now. Is he going to hold? Is he going to sell? Is he going to buy? We're going to find out what Rob's doing. We're going to find out what David Tepper is doing now that we have BABA up like 50% and like JD.com and all these companies. So when you think about Rob Vinall's thesis and what these super investors are buying, guys, like this video and subscribe. Peace.